where you can ask your mortgage questions. We're here to answer all of your information. Every Thursday, we do our show where you can tune in, get market updates about what's going on in the real estate and credit markets. Got a lot of information that we want to be talking about tonight, so I appreciate all of you guys watching the show and the channel. So I hope everyone's doing well, and hope you guys are getting great content out of the YouTube and all the social media, all the stuff that we put out there. So. And again, if you guys have any questions that you want to ask at any time, you certainly can. It's just a time to relax, chill out, ask your questions, and learn. Remember that I've been in the lending business for over 2 decades. We lend nationwide. We do all different types of loans: residential, non-QM, FHA, VA, USDA. We do construction loans, land loan, HELOCs loans. So call or text us at, hey Kevin, good evening. Thank you so much for tuning in, man. Call or text us at 832-431-6331 if we can help you, with any of those type of loans. You have questions, we want to be able to help you. Appreciate all of the help and support out there. Our channel, Angelo Christian, and you have I think you've seen us on Instagram. So anyway, I'm just going to be, talking tonight about some of the stuff that's going on in the markets. And if you guys have any questions, feel free to bring those up. So hey Ronaldo, so cool. I'd love to hear from you. You can call us or text us at 832-431-6331. Reach out to us. And I'm just going to be, like I said, ask any questions that you guys want. Tonight I'm drinking bourbon. That's Angel's Envy. It's a pretty good bourbon, daily sipper. I do enjoy it. And going to be pairing that with this is a Cohiba, a Siglo 6, if you guys know what that is. So that's what I'm going to be doing tonight. And like I said, if you guys have any questions, whatever you need, don't feel free to ask me. I want to help you out and answer anything that you need. So. And it's just meant to be like a relaxing time, and I want to help you guys to get you the information, whether you're trying to get a loan or whatever you're trying to do. We want to help you out. So as I stated before, we're a nationwide lender, and I've been doing this since 2005, and we've helped thousands of people. On that, it's been very fulfilling, and to be able to help people, to give them the money, whether it's a first-time buyer, an investor buying a multifamily or a single family, or a veteran or whoever, to buy a house and get a loan. It's a very rewarding feeling. So that's what we do. That's our business, is that we make loans. So this channel that we do on this live is for you to answer your questions. It's mortgage questions that help you to get you the information that you need. So again, I appreciate all of you guys watching the show and the channel. And I'm going to kind of go into my stuff I want to talk about. The big thing that I think that's important right now, what's going on, is with interest rates. I don't know if you guys have seen. So interest rates right now, surprisingly, have skyrocketed, and it's kind of, you wouldn't think that would be happening right now. And so, inflation is somewhat tame. Housing prices have come down. I was actually thinking interest rates are going to do the opposite. I thought they're actually going to come back down in June, and they're actually going in an extreme opposite direction. And if you look at what investors monitor to determine what's happening with interest rates, it's all kind of stemmed in the bond market, the 10-year treasuries, and there's a huge gap right now between the 10-year rates and the 30-year rates. And when that happens, there's usually a lot of concern about the future of the economy, of the market. And that's what's happening right now. This happened before in 2009, when it's called the spread. Your spread started to wide vary from the 10-year to the 30-year rates and bonds. And when that happens, the rates go higher. And that could be a reason because people are thinking that there's a higher probability of a recession or something that's going to happen. And so, interest rates go higher. Now, I certainly don't think it's going to be as bad if there is a recession as 2008, but it could happen, right? And it may be short-lived. It may not be something that that has legs, that has a chance to sustain and go with higher rates. I'm hoping, obviously, that rates are lower because I know how important, and I'm going to be talking about something tonight in regards to rates, how it's affecting investors right now. And so, in fact, I mean, we can talk about it right now. So, with interest rates as high as they've been recently, it does cause problems for real estate investors. So, in fact, if you look at, there was an article published on MSN that stated that there's over 700,000 rental properties that are on the brink of either being foreclosed, auctioned, because of how high the interest rates are right now. Because when rates have gone from, let's say you're an investor, you bought your rental property at 4%, and then the rate jumps to 7%. So use examples, and then you want to try and sell your property now, or for whatever reason, or even refinance and cash out. The problem is that the numbers don't make sense for the lease that you made with that tenant. If you're leasing at $1,500 a month when you bought the property at 4% interest, and now a 7% rate, you're going to have to lease, increase the rent to $2,000 a month, or you can't make enough profit on the cash flow to pay the mortgage. And so a lot of investors are in this conundrum right now because they can't make the payment, and they can't increase their tenant's rent by 50% or 40% to cover the higher interest rate. So it's caused a problem with a lot of real estate investors because the thing is that you're not going to be able to raise the rents to your client, your tenant, that extreme, that drastic, that fast, and you're not going to go negative every month if you are cashing out. And the new person, if you're selling your rental property, if they have to take on a loan, they're not going to do that either. You know what I mean? So it's a big problem for a lot of real estate investors. Now, if you have cash and you don't need a loan, then it doesn't matter because you just buy the property in cash. But if you don't have cash, then you're going to run into this problem. So, and it's kind of sad because there's a lot of great opportunities out there, and we can't seize those because if you are an investor, let's say, there's a lot of foreclosures on the market right now. You're not able to take advantage of those because maybe it doesn't make sense from the debt service coverage ratio, to purchase that property. So those are, some concerns that a lot of people have. And if, 700,000 rental properties actually do go into foreclosure, obviously there are going to be people that benefit, so other people that are looking to buy will purchase those properties. It could be primary residence. And obviously the thing is that if you buy a property now and you pay a higher rate, you can always refinance later. Rates are not going to stay this high forever, in my opinion. They will come back down, and you will be able to, refinance and then get a lower rate. But you probably bought a property at, 80 cents on the dollar. So you do have some embedded equity. So it does make, some sense if the property is in a great location. Because you see, the thing is that with the whole thing with real estate, and you guys already know this, that, land is fixed. You're not going to be able to get more land. And if it's, great location, then it's really invaluable over the long run. It may be in the short run, some ups and downs in the valuations, but in the long run, it's still very, very attractive. It's in the right locations, and we have and actually I want to talk about that because I have a little thing here because we know a lot of the business that we do is with investors and self-employed entrepreneurs. So I want to talk about some of the hottest markets that we're seeing right now, and then some of the markets I think that you should stay away from, based on the research that we've done, and like a lot of the stuff that we subscribe to. So and if you guys have any questions, feel free, ask me any questions in the chat box. I'm happy to answer those for you. Okay. So a couple things that, speaking about where I think if there is a huge foreclosure boom, the top 5 markets that I think that you should be looking at if there is, if this really happens and there's a bunch of foreclosures on the market and there's great deals. I have five areas that I think that you should consider looking at to invest in, and I've done other videos on some of the markets that I think that are really good. I talked about Oklahoma City, Tampa, Orlando. It was what else was in there? Springfield, Massachusetts is another one that's really good, and then there was one in North Carolina. And it wasn't Raleigh. I think it was Greensboro. And those were the top 5 markets based on all the research that we did that had the highest growth rate, highest rental rates, highest income per GDP. So it made the most sense to really get in those areas because if you're a landlord and you want to buy rental properties, that's what you're looking for. Those are your KPIs, the metrics that you're looking for. If you want to own, it doesn't matter if it's multifamily or single family. Okay. So anyway, and the information that we've compiled, from all of our investors that we work with, and what they're telling us with the top 5 markets. And I mentioned Springfield before. So Springfield, Massachusetts, is still a very, very good market to be looking at if you are a real estate investor. So write that down, Springfield, Massachusetts. That's a great market to look at. Another one is Hartford, Connecticut. If you guys like Connecticut, Hartford is a great area to look at to invest in real estate assets. So I think Connecticut's a great state. I love Greenwich, and there's a bunch of great areas in that state that are really cool. But Hartford's still coming up on our research. Another one, surprisingly, Concord, New Hampshire. I don't know if anyone watching the show is in New Hampshire, but Concord is a really, really great area for real estate investors. Another one that there's actually 2 in New Hampshire, surprisingly, that popped up. Well, the first one is Concord. The second one is Manchester. So Manchester is the other one that is also very hot right now for real estate investors. It's got great rental rates, low default rates, and so I think that's a really, really good area. The other one is surprisingly, I was actually surprised about this, and it's not because I don't like New York. I think New York is a interesting state, but Rochester came up as one of the top places to purchase real estate for investors. So we lend in New York. I have nothing against it. It's just that it's a different state to do business in, and a lot of people like New York. I think it's a cool state. It's just it has different requirements, in my opinion. But if you like New York and you want to buy in Rochester, Rochester's another great area. Personally, in my opinion, I still think that areas like Oklahoma City, Tampa might be starting to get somewhat saturated. Orlando somewhat saturated, but I like Oklahoma City a lot. I think it's a good area, and Tulsa is a very good area too. Tulsa, Oklahoma. I don't know if anyone watching the show is from Oklahoma, but I think it's a great area. Oh, hey, Becky. In Texas, how soon can you get a HELOC after buying a home? It depends. There's a lot of things that it depends on, if it's a primary residence, or if it's a second home. And then also how much equity you have in the house. In Texas, the maximum that you can go up to is 80% of the value. And if you just purchase the property, I don't know how much money you put down, but you can only go to 80%. And then you can do either a first lien HELOC, which is a all-in-one, which is one of my favorite programs. So you could technically, let's just say, I don't know your situation. Let's just say you bought the property 3 months ago. You put 20% down. You'd have to wait a little bit longer to build more equity because you're already at 80%. Let's say you bought the property in cash, though. If you bought the property in cash, it was a $500,000 home. Well, then you can go up to 80% now. You don't have to wait. But let's say that So one thing about Texas and the equity laws here is that if you did a cash out loan previously, you have to wait 1 year if it's a primary residence before you can do another equity loan. If it's an investment property, that rule doesn't apply. So it just depends on the situation. But just know that the big thing is the 80% rule in Texas. You're not going to be able to exceed that. So usually you have to have a lot of equity in your property in Texas to be able to get a loan. Now, see, in other states, that law doesn't apply. You can go to 90% of the value, but not here in Texas. So I don't know if that answers your question, Becky. I don't have all your information, but that's kind of a general. So good question though, because a lot of people don't know Texas has the most unique equity laws, out of all the states in the country. So okay, well, yeah, then okay, if you bought your home and you put 50% down, then in theory you could do an equity loan now and take out you could take out 30%. So in other words, if you bought the property for $500,000, you put 50% down, you have a loan for $250,000. Well, then you have 30% equity, right? Of $150,000 of available equity that you could pull out. Okay, you don't have to wait because you did a purchase. If you had done an equity loan initially, you'd have to wait a year. So I hope that answers your question. So, all right. So we talked about the 5 markets that right now, according to real estate investors, Yahoo Finance, Google Finance, MSN, where they think some of the best markets are. I told you what I think based on all the loans that I've done, based on all the investor networks that I attend. So you're welcome, Becky. Thank you. So, the 5 markets to avoid. So one of them is in Texas, and I knew this was coming, and I've talked about this on some of my other podcasts that this city has been in the upswing for the last 2 decades, and finally starting to see some real pullback, but. That doesn't mean it's a bad thing. Okay. If there's a really good area, and that city, just so everyone knows, is Austin, Texas. It's a beautiful city, probably the most beautiful city in Texas, or surrounding Austin, the Hill Country, and it's grown crazy. I mean, it's very expensive real estate, and rightfully so. It's very beautiful, and there's a lot of natural resources and precious amenities around it. So But recently, the market has pulled back. Um, the DOM days on the market has tripled in the last 6 months. That means how long it takes to sell a property. Property values have decreased by about 10% in the last 4 months. Now, again, that doesn't mean it's a bad thing because it's still beautiful Austin, and there could be opportunities for people looking to buy their new primary home or an investment property. Lake Travis is gorgeous. There's so many beautiful areas around Austin, but it is, on the downturn. But that doesn't mean bad. It doesn't mean negative. It just means that if you're buying right now, you don't know how. They always talk about catching a falling knife. You don't know how low it's going to go. But in the long run, it's always going to be a great area if you buy in the right area. Obviously, not every part of Austin is good. So there are some parts that are not good. So. But Austin is on that list, and I do agree with that. So another one is San Jose. We get a lot of clients from California, and San Jose is definitely on that list. I would stay clear, in my opinion, of San Jose right now, because in that, 17% cash. What options do we have? We want to cash out. Thank you for your time. Thank you, Cree. Appreciate that. So. Korea, I'm assuming that you're talking about rental properties. Yeah, we have a lot of options. We have DSCR, which is the Investor Cash Flow Program. We have a bank statement program that you can do. So the DSCR is kind of like, it's considered like a no-doc loan where you don't have to verify your personal income. It's underwritten off the cash flow of the property. So that's one. You can do Fannie Mae or Fannie Mae conventional. So there's a lot of different options that we could do. We just got to talk about your situation. That's why we're here. You can call or text our office to get more information and get help at 832-431-6331. We want to help you out to make it happen. So call us or text us. We'll be back in the office in the morning at 9 a.m. We can discuss it to figure out your situation to find out what's going to be the best program for you. So Austin, San Jose. Another one which I'm not surprised about and which I do also agree with is Phoenix. Phoenix, it's just another bloated city. And I'm not saying that I don't like Phoenix. I'm not saying that it's bad, but I'm saying that what we're talking about is from a value perspective. You buying real estate and trying to make money. I'm not saying that I don't like Phoenix or it's bad. I'm just saying that the statistics, the data, supports that these are not good areas right now to invest in. That doesn't mean that it's bad or nobody likes it or not to buy there ever. It just means that things are overvalued there right now, okay? So Phoenix is one of those areas. So you're going to find out what's surprising about this list is they're all, for the most part, really good cities that are desirous where people want to live or they're a tourist attraction, but they've kind of overgrown, right? And when something overgrows, it starts to get oversaturated, overvalued, and it doesn't make sense to really cultivate that market anymore, okay? So, excuse me. The next one, is. So, and I didn't have this on my radar. Is Reno. I don't know if anyone ever been to Reno before or what your opinion is about Reno, but Reno, Nevada, is a place to stay away from right now if you're buying real estate. I've never had any desire for Reno, so I'm indifferent to it. If you guys like Reno, that's cool. I obviously prefer Vegas over Reno any day of the week, but everyone has their opinion. Some people like Reno better. I don't know. It's just not my cup of tea, and I wouldn't ever put any money over there. But some people really like it there, and they do very well. So you've done well there, and keep doing what you're doing. It doesn't mean that, I'm not telling you what to do. I'm just giving you the information. So The other one, which has been a very good city, the last one on the list, for the last. Oh, thank you. You're welcome. The other one the last one on the list that I think is a really good city, but I think it's just been overbuilt, oversaturated, and priced out of the market is Boise. Idaho, I think it's got some really cool cities there, and Boise is one of them, but it's very expensive. And from a price to value perspective, it's not a good place to invest in right now, because you could be upside down. You could buy a property at top dollar, and then next year it could go down by 10, 15, 20%. It's happened to many people. So, but Boise, Idaho was on that list of areas to stay away from. So now, does that mean that Angelo's right about all this, or these market gurus and MSN and Yahoo and all that and Investor Nation? No, it doesn't mean that 100%. There's people that probably do very well in Boise that live there their whole life or whatever. They study the market, they know what they're doing, and they don't need to follow this. But if you're trying to figure out where you want to put your money and you're just getting started, or the one thing is, I will say, that I think is important, especially if you're new in this, that you should be staying very close to your house or in the city that you live in, to kind of get started. Because what you don't want to do is, like, if you live in Austin and then you're buying stuff in Chicago and you've never done this before, I mean, I think that could be very dangerous. You got to just be real common sense about this. I mean, I get, sadly, we get a lot of customers that call us, and they do those type of things, and then they get in trouble. They don't know the laws. They weren't familiar with the area. If they were doing rehab, the contractors trying to get the tenants qualified. You got to just be really careful about it, and know. I would say stay in your lane, stay in your market, and then find something that is in your area. Start there first. Now, when you get really big, and you have a whole team, and you got property managers and asset managers and stuff like that, then it doesn't really matter so much, because you have more money to deal with, and you're trying to find really good deals, and you have teams that can help you to manage it, right? So, so I think that is a really important thing too. So obviously, we want to help you in any capacity. We do, primary residence, secondary home, investment properties. We want to be able to help you any way we can to, scale your portfolio, scale your net worth, educate you any way we can to get you the funding. So, I hope that you guys get value out of the channel, the show. If you know anyone that could get value out of this, share this information with them. We got, I think, over 1,300 videos, over 7 million hours watched on our channel, nearly 70,000 subscribers. So if we can help you with any type of funding, call or text us. We're here for you. 832-431-6331. We do the lives every Thursday in the evening, around 6:30ish Central Time, and then we have 3 videos that we produce every week on the channel, Monday, Wednesday, and Friday, and it's just there to give you information. We've had the channel since 2017, so 7 years we've been doing this, and we're going to do it until we can't do it anymore. So, and if we can help you with getting a loan for you, reach out to us, call us, text us. Like I said, it's 832-431-6331. We'll be back next Thursday. Actually, I apologize. I won't be here next Thursday. I'll be at a conference. So we'll skip next Thursday and be back the following Thursday to do Talk with Angelo. So I appreciate all of you guys watching the show and the channel. We'll see you guys again next week. If you have any questions, you can not only call us, you can also text us too, and we will respond to you. So that's the biggest thing. We'll respond as soon as we can to get you the information, contact you back. So thank you guys so much for watching Angelo Christian. We'll see you guys soon. Take care and peace out. Bye-bye.